Hello, mic test, mic test. Looks like the microphone is working fine at my end. Hello, guys, and welcome to the 176th edition of the Trading Opportunities webinar. This is your host, Nirav, and just let me know in the comment section. Sound, how is the sound? All right, Marco has already responded here. Manuel, hello, microphone. Okay, how's the screen share? Let me know. 437. All right, guys. So in that case, it looks like everything is working fine, though I don't have a confirmation for the video, but I can see it at my end and on the broadcast of the secondary display I'm measuring. So anyways, let me give you a quick introduction. My name is Nirav. I'm the admin and owner of 50eyes.com as well as 50 eyes Market Analysis YouTube channel. And this is the weekly trading opportunities webinar series called quite simply trading opportunities. And what we do here is discuss global major markets like EURUSD, crude oil, gold, S&P. Sometimes we do discuss certain stocks and 1 second. Yes. So sometimes we do discuss certain stocks. These days we are following the stock of NVIDIA. Overall, we come in live every Friday and discuss these markets. So far, our track record has been that we have captured a total of 437 trades in the last 174 webinars. All were discussed live in front of you guys over here on YouTube. And what happened with this 175th webinar, we'll discuss today in our 176th edition. Apart from all this, I do have a course on Elliott Wave. You can check out the details. There's a free, what do you call, part of it available as well. Check that out by using the links in the description of the YouTube video. And if you are on LinkedIn, check the description in the LinkedIn live broadcast. Right. And the whole course is available here, Elliott Wave course. You can also check my past record of 80% plus accuracy for 6 years consecutively here. We have a very elaborate track sheet of whatever was said, whatever happened, everything is very clearly mentioned here. And I do have a book for those who are well versed in the basics of Elliott Wave. It is for intermediate to advanced traders. Lastly, if you want to get these updates live, I do have a private Slack group. You can request details for the same over here. That's about it for the quick introduction. Thank you for the confirmation, Joe, about the audience screen share. Let's now begin with the actual broadcast. We will go over the charts of Euro USD followed by crude, gold, SPX, BTC, and then NVIDIA. Every time I go over a certain stock, I'll first discuss what was being said in the last webinar. For that, I'll just open the last webinar very quickly here, and then we will begin with the discussions. So first of all, let's turn the video quality to 1080p. Second, let me just mute the audio. Make it 1080. Post, go to Euro. And somewhere here, we will now start discussing our, what do you call, discussions. So first of all, we are looking at the chart of Euro from our past webinars discussion. We have right in front of us the last discussion, which is pointing to an impulse in the downward direction. And let me just play it very quickly. And see what is being discussed here. I'm placing some alerts and we are more or less looking for short configurations here at 1.16608 as the trigger level. That's, I guess, the setup for Euro. 1.16608 below that is short. I don't think there's anything else. Anyways, let's now look at the live chart of Euro and see how things have progressed since our last discussion. Now on screen, we do have the live Euro chart. Last discussion, as we know, was on last month's 26th, I guess. Let me check. 26th. Anyways, so 26 somewhere here, and the level was, let me just check that again, 1.16608. Below that, we would look for selling opportunities. I think that was the analysis. And if that was the case, it does not look like it has played out very nicely. Let's see if there was a counter view. Yes, play, looking for the impulsive continuation in the third, correction in play for fourth. Hmm. Hmm. Yep. Yep. So it has literally gone to that level almost, and it has then reversed. So that means our analysis had not performed really as we expected it to. And let's see what's really happening. Actually, I do. Yes, I had taken shorts in accordance with that analysis, and today only we had closed the shorts. Let me just show you near entry with the minor loss. So here's the post here. Close shorts at once and minor loss will look to re-enter below 1.6955. So things have changed, and that's what we have to discuss right now. So first of all, this analysis has not really given the downfall which I was expecting for a wave 4 and then a wave 5 to play out. It has taken way too much time for what you call a down move. So that's why I had to make an update on this count. The update right here is that from this point of reference, which is the price level around the price of 119,175 date 17 September roughly, we have, I believe, if it's an downward move, a nested impulse in play. A nested impulse is basically a series of ones and twos in the downward direction. So we have one leg down, two leg, second leg up, and this is the third leg down, right? But within the third leg, we will again have five waves because it's the fractal nature of a lead wave. So dot one over here, dot two over here. Similarly, we have the one over here, two over here, dot one over here, and perhaps the dot two is still continuing. Whatever the case may be, it cannot breach this high of price level 1.18183. So 1.18183 is what you call invalidation level for this count. Right. That's the current analysis. I'm not very pleased with how this is playing out right now, and there isn't much of a point in holding the shorts. We can always re-enter once we see a move below this alert, which I'm currently placing below the price level of 1.16864. So far, I'm not very pleased with the count, and this is the setup below 1.16864. I will consider looking for short trades. Perhaps I enter minor short positions and look to add more below these lows or near these lows of wave dot one. Invalidation to the upside is the level of 1.18183. Above this, we will consider that this downside count is probably not playing out, right? So euro is a wait and watch and not the best or the most clearest chart at this point. That basically means if I do initiate shorts, I'll probably not be taking on a very huge position. So just be mindful of that and stay cautious on this one. Nothing much to add here. Let me know if you guys have any doubts or questions. If not, just type in clear understood very quickly in the live chat. And then we'll move over to the next chart of crude oil. Yes, Martin, we were a little bit late. Good to see you here in the live webinars too. Hi, Marco, one of our private Slack group members. Hello, Joe, again, one of our private Slack group members. Thank you for the confirmation there, guys. Hello, Matthew. Good evening, Raghu. Again, one of our private Slack group members. And thank you for the confirmation. Although it would be nice to see a little bit more of the participation, I can see a lot more people are alive than those who are participating in the live chat. Yes, there is a question from Joe. but it still can be large correction phase. Large correction phase. You mean this dot two, Joe? I guess. So if that is the question, then yes, dot two we are counting it as a possible continuation. Let me remove all the drawings. So if you just follow the yellow count, I am assuming that from this point of reference we have a wave A up, a B down, and we will have a C up here. Perhaps this is just the wave one of the C. Let's say Roman one, and there will be a 2, there will be a 3, there will be a 4. Anyway, sorry, that's not possible because this is the invalidation level. Right, so we can say perhaps it's having some more upside remaining, but it should remain below the invalidation level, which we had marked earlier. So yes, the continuation of correction is possible. It can still head up for the C before the fall. That's a possibility. No, I meant it can still be WXY instead of nested 1 to WXY. Yeah, sure. It can take that formation. And in that case, even so, it can be a WXY. It still doesn't change anything because you can just count this as a W. Let me just change the color here. You can call this as a W. Second. Yeah. Call this as a W here, X here, and Y here. So good observation there, Joe. But even in that case, we are looking for this down leg. Although in that case, we will not be really considering or be mindful of this as an invalidation level, because in that case it's not a 2, so this invalidation level of 1.183 or whatever that was will not hold true. Although there are reasons why I'm not considering the WXY just yet, and the reasons I'll probably post the counter view in the Slack group, but it's currently not our main hypothesis. That's why I did not want to discuss that. It's very low probability at this point in time. There was one more thing I had to add here, I guess. Yeah, this red trend line, this can act as a good resistance level. So if we see a pullback touching this red trend line, that will be a good shorting opportunity. So yeah, let me know if there are any further questions, else we'll move over to the next chart. No questions. You're very welcome, Joe. All right. In that case, let's head over to our next chart of crude oil. And let's see how things have progressed since our last discussion of this market. Somewhere over here, we had a very lengthy discussion on crude, I can see. Right, let's see how things are going. All right, so in crude oil, it looks like we are discussing a complex correction kind of thing here, and not complex really. It's an A up, B down, C up. And I think I was looking for more upside movement on the C. Let's see. Let's increase the speed here to 4 and see what's being said in this discussion. Yes, we are looking for more upside. We have a resistance level, and it can take this market to at least 67.81 or 66.759. That was, I think, the main view. And then we are looking for downside movement on this counter. And there's a alternate view. We are considering a possible diagonal formation. There it is. 1 second. Yes, there it is. We are considering a possible diagonal formation. So anyways, in both cases, we are looking for some upside and then down move. And in this particular case, we are looking for down move first. So swing perspective, we were looking for bearish sentiment on this counter, right? I don't think the setup played out very clearly, but let's look at the actual chart to find that out. Here is a live chart. Last discussion was on 26th. Here's 26th, somewhere here. So now you can see the setup has played out. It did go down. So overall, the swing perspective of the market going up and then down. I don't know why it's showing so many arrows. I definitely deleted some of them. Sometimes TradingView does keep a copy of the last deleted file as well, and then makes things confusing. Anyways, let me just remove them. So, anyways, conclusion here: the market did go and follow the bearish path. The swing perspective has played out, and our idea basically was that this box range. Let me mark it to make it more clear. Our basic idea or theme was that this box range, the market will either touch the low here or the high here or here, whatever. It doesn't really matter where it will touch. I'm not suggesting time. I'm just suggesting price targets. So as such, the main view I had was that the market will just continue going up and perhaps go till this one 67.846, but it eventually decided to reverse from here. So as such, the market has followed the count plus one here because it went down as per analysis. Although, as I mentioned, it didn't really fulfill our primary criteria. It followed our swing perspective, not the short term analysis. So, yes, not everybody would have been able to catch this move. And with that being said, let's now look at the actual count I'm following right now on this counter. Again, TradingView has messed up the counts. It hasn't deleted the old counts, and there are now overlays. All right, so I'll just explain it from this point of reference. We don't have to go too much back in time. So this point of reference or starting point of analysis is around the price level of 71.36, date around 31st July. And from this point of reference, we are counting a wave one here. And then we are counting an a B, and then I'm expecting a possible C here, which will complete a second wave and then will be followed by like lower. Those of you unfamiliar with what we are talking here, we are talking about an impulsive structure in the downward direction, and Elliott Wave terminology, an impulse is a five-wave progression in the downward direction. First leg is considered wave one, second leg is considered a correction for two, third is a correct move down and motive wave for three, correction for four, and leg down for five. So if we follow this rough count on the left hand side, we can see that the one is over, two is probably under continuation, and then which will be followed by a downward movement. A counter view here is not a counter view. Secondary view here is that this market can just straight out go down as well. So these are the two main views. Why can it straight out go down? Because we can also assume that the two is probably complete here. After all, the basic requirement of ABC correction is that the high of wave A be taken out if it's a flat correction. Not necessarily, but generally it is in case of regular. Right. So in this case, it has already done that. So perhaps maybe it's the two complete here. If not, we can see some pullback here. And for that, I will push an alert somewhere over here, roughly speaking, around 63.12. Above 63.12, if we see a move, then we can consider that it's possibly a wave C. Then we'll look for the internal structure of wave C and look for trading setups or trade setups for the downside of this market. So that's the main view on crude oil. We look for corrective continuation in the wave two with the final leg in C as a flat correction, specifically a running in degree, running in nature and running flat in nature, I mean, and what else? I guess that's the commentary, right? And if you don't want to, if you are not what you call knowledgeable enough to follow these corrections and all, I obviously will post them in my private Slack group. But if you are not a part of it, then the simple setup becomes this. We look for shorting opportunities below 60.78. That's the trade setup for conservative traders. Actually, it should be a little bit lower as well. It's a breakdown trade. It breaks below 60.78. We expect that two was probably complete over here. And this market is just following this arrow instead of this one. I think it's a simple enough trade setup. It needs to be followed. It is a clear setup, and it will most likely give us some good trades in the coming sessions. I have discussed both scenarios, aggressive as well as less aggressive scenario. Let me know if you guys have any doubts or questions. If not, just type in understood or clear in the comment section, and we'll move over to the next chart of gold, which I believe most people are waiting for anyways. Nako is asking, so is a big down move? Yeah, that's the expectation, Marco. That's definitely the expectation, but we are waiting on this wave C correction here because that's our main count. What we can say is if we get it, we will not only reduce our risk, we can enter bigger positions as well. That's why I'm waiting for this possible wave C correction. Joe is clear. Raghu is clear. Okay, thank you guys for the confirmation. Let's now, in that case, head over to our next chart of gold, which is, why is there no alert showing up here? I had placed an alert here. I don't know. Sometimes I feel like not only the drawings, some alerts are also disappearing. One second. There it is, the chart of gold from our last discussion. And let's see what was being said on this chart during our last trading opportunities webinar, which was on 26th of last month. Looks like we are looking for bullish setup. And let me just play the video. 3875 is the expected target, I believe. And the arrow is up. We are looking at an impulse wave, one up, two down. Let's see if there is something else we discussed. What am I even discussing here? So we are in the fifth wave. We are in the first of the fifth, second of the fifth, third of the fifth. So we are expecting strong up move. And 3875 was mentioned as a target. Is there something else? Let me see. Yes, that is about it for the discussion from what you call last. This was a discussion from last webinar. We were expecting up move with the target of 3875 roughly, and the propagation expected to be an impulse in the wave 5. And the target was coming from, I believe, trend line target intersection with the trend line. Anyways, that's about it for the last discussion. Let's now head over to the live chart and see how things are progressing here. So here we are on the live chart. 26 September is over here. The market has not only gone up, it has smashed the target of 3875. Target was 3870 to 75 region. It did go to 3870 region, took a pullback, did surpass the target. 3875 is currently sideways. So once again, it's a plus one. Just like last week, our gold analysis has worked out, and it went up as per analysis. I mean, this is all the analysis from free webinars. So even if you were just attending the free webinars, you would be catching all these trades. So let's see what's going on now. And it is actually following the counts picture perfectly. This is the last point of reference or the starting point for our analysis. As I mentioned, we are in an impulse. Those of you in the webinar who are interested in learning the longer time frame analysis, just watch the last webinar. I have discussed the high time frame analysis in detail, and I do not want to repeat myself here and take too much time of the audience. So anyways, from this point of reference, we are looking at an impulse in the upward direction, and impulse will have 5 waves. So wave 1, 2, and this is the 1 here. Let me just change the color here. So 1 here, 2 here. Let's just call it a circle degrees 1 and circle degrees 2. And then we will have the 3 here. So In the Elliott Wave technologies, an impulse will have waves 1, 2, 3, 4, and 5, and the waves 1, 3, and 5 will have 5 waves inside of them. So currently, since 1 is complete here, 2 is complete here, we are looking at the third in play. And this third, once magnified, or if we look at these internals of the third, we will find that it has 5 waves inside of it. So these are counted here, let's say as Roman 1 and then a Roman 2. And then I've counted the Roman 3 over here and possible Roman 4 over here, and then expecting a fifth up for Roman 5 here. So that's the play we are expecting currently on the chart of gold. We are looking for bullish continuation, and the idea is to look for scalp longs from here on. Session will come to an end in a few hours. So if we see a break above whatever this is, 3892, just keep be mindful that we are using this data feed. If you are using a different data feed, price will be a little bit different. So above 389, let's say 3892, we can look for scalp longs, and the idea remains the same. This is a circle 3. Once this is complete, we will then see a possible pullback and then another leg up for circle 5. So as long as this count is working, this analysis is going to give us one leg and then another leg. So two opportunities in the other direction. Hence, pullbacks here are to be looked out for as buying opportunities. That's the analysis right now. Definitely a market to keep in the watch list, as it is definitely going to give us some exceptionally good trades, at least on the scalp side. It has already given us exceptionally good trades on the swing side. Now it's the time to check the shorter time frame on this counter as well. So that's the view on gold. Let me know if you guys have any doubts or questions before we proceed with the next chart. Let's just check a few more things here. Those of you looking for the targets, we are now looking at 3936. As the incoming target level. Of course, not a concrete target, just a simple trend line analysis is suggesting it. But if the market is super bullish, then I don't think there should be much of an issue for the market to reach these levels. That's about it for the analysis. Again, guys, if you are in the live webinar, do not forget to type in understood or clear if you are following the analysis with me. And of course, at this point, we have discussed three major charts: Euro USD, crude oil, and gold. And two of the analysis, that is the analysis of crude oil and gold, have worked out as discussed in the last webinar. So in case you were following me from the last webinar or have been following me since some time, or even if you are watching this for the first time and liking the content, make sure you hit the like button, and even more importantly, do share the content. This is 176th edition, and still our webinars are not really reaching the views we were really hoping for when we started this series. So do share the content in Slack groups, Discord groups of traders, or with your friends or colleagues directly via WhatsApp or email, so that more people can benefit, more people can join in, and we can continue doing these webinars with even more market coverage. Anyways, that's the request. And with that being said, I don't see any further questions. Thank you for the clarification, Joe. And we will now like to move over to the next chart of SPX. There's a question from Raghu. Is there the possibility of pullback at resistance? 3892 with wave 5, something this. No, I do not track traditional head and shoulders, but yes, I'll look at the level because you have marked it. 892. I don't see 3892. It's the last resistance. So yes, the market can pull back from there. I personally do not think it should. I think it should show some strength here. It has already tested that level twice, and we already have a marked resistance here around 3899. So it's a psychological level 3900 almost. That's the resistance level. So yes, it can possibly spend some time here if we remove everything. It's already a sideways boxed range. So yes, perhaps it can move inside the range a little bit before takeoff. But yes, as I said, I do not track those traditional Edward and Maggie classical technical analysis of stock trends kind of patterns. So I will not comment on that, but that should satisfy your question. So here's a chart of S&P's 500 discussion from last webinar. Let's see what's being said about this chart, and then we will move over to the current chart. So long-term chart analysis, we are not interested in that, I think. All right. Yes, I remember S&P. We had a very strong resistance from a high time frame incoming, and the view was that if the market sustains below this level, then we can look for selling opportunities, and only if it sustains above that level, we look for long opportunities. Let's see where I have marked the level. It's a violet line we have here, 6675 roughly. So if the market sustains above this level, only then we'll be interested in long trades. That was the whole setup, right? That's the complete discussion from our last public webinar, which was conducted on the 26th. And the view was that I had a bias to the short side with the setup being whatever this is 6580. Lower than 6580, we will be looking for selling opportunities. That was the bias we had. One second. All right. So as I was saying, we had that bias of looking for selling opportunities below that alert level 6580, and the secondary thing was change of view if you see move above 6675. Let's see now what happened really and discuss the things from live chart. So here on screen we do have the chart of S&P's 500. 26th is somewhere over here. Twenty-sixth here. I'm just trying to identify what's the exact move afterwards. All right, there it is. So yes, so as it happened, the market did really, this is the marked resistance level on the higher time frame. Let's just draw it over here. So as you can see, the market did go above it twice here. And then the next time, the third time, it really did sustain above it, broke through and sustained above it. So this confirmed that this market is looking more bullish and that our bearish view is simply not gonna play out. And at that point, I have also decided to go long. Actually, before that, I decided to go long, and we already have long position on S&P's counter. I did longs. Let's see what's the trade. Here's the commentary. I did minor longs around 6700. Then I did some more longs around 6732. So we are already running in, okay, the secondary position is not in profits, only the primary position is in profits. So yes, we are running in net positive on this counter, and I'm still holding longs. Let's see what's the setup here. I have moved the stop loss to 6690. The idea being that, let's just show you the idea first. This is the point of reference or the starting point of this count or analysis. If you want the high time frame analysis, I've discussed it in quite detail in the last webinar. Watch it and then you will know what we are really talking about here. So we are expecting this as wave 1, expecting this as wave 2. Actually, the stop loss needs to be wide. 6690 will not work. What's the original stop loss I have is 6600 here, as you can see. 6600. So let me now just show you what we are expecting from an Elliott Wave perspective. First of all, let me know if you have any doubts on the discussion so far as to why we have concluded and decided to go long, reverting over past buys. 1 second here. In the meantime, I have to check one thing on my own trades. Hmm. All right, that's fine. Right. So I was saying the stop loss needs to be kept around 6600 itself because this market is not necessarily having the wave to complete here. We do not have the confirmation for it. Perhaps the wave 2 is just continuing with an expansion in the range. So first the range was this box. Let's draw it with a different color, yellow box. Now the range is this CN box. So the market can perhaps even travel and come back within the yellow box range. So to keep that possibility and avoid closing positions before they should be closed, we will have to keep the stop loss wide here at 6600 roughly speaking. So that analysis is just that, plain and simple. Nothing much to add here to that. And with that being said, it's a long market right now with the current idea being looked to add longs on pullback. If you aren't long, you can be conservative about it and look to add longs above 6750 or 60. So above 6750, you can look to add longs, and that's rather conservative and risky. At the same time, the better idea would be to wait for pullback. If one happens, then we can look to add longs, and stop loss remains around 6600. Do be mindful, we are using this data feed. If you are using a different data feed, then the prices will vary a little bit. Right. Just give me a moment here, and I have to check one thing here. Not on the chart, a technical issue I'm seeing here. Let me just correct it first, and then I'll be joining you guys. In the meantime, just let me know if you have any doubts or questions. Um, all right. All right, done. Issue has been resolved. I can see a question from Marco. What about the other participants? Raghu, Joe, Beth. What about you guys? Are you not in the webinar? Why can't I see you posting any doubts or questions here? Done. All positions have been adjusted properly. Now I can close this and focus back on the webinar. Let's just take the question we have. Chat. Drawing the trend lines accurately like orange trend line to decide the bullishness, maybe in private webinars. Yes, definitely you can answer that in private webinar. Definitely you can ask that in private webinar, Raghu. And let me see what you are really referring to. Oh, that's just a long-term time frame trend line. Just check the last public webinar. You'll probably get the answer there. Marco has answered. Is it okay to enter on the market now? Is okay to enter? Well, I just discussed the whole view, Marco, and you can also see my live trade. So if you missed the part, then I'll just reiterate that there are two trade setups. If you aren't in the markets, the primary setup is look to long above 6750. You can look to consider long trades above this level, or you can look to go long once the market gives some pullback with the stop loss being at 6600. That's the answer to your question. I was writing a question, but you're answering it in the meantime. So all clear. And that's good to know. Hopefully I cleared your doubt, guys, Raghu, Marco, and Joe. And with that, I think we have discussed the S&P chart in quite a bit of detail. Let's now head over to the chart of BTC and see how things have progressed for that. You're very welcome, Marco. Chat and text. So here's the recording from last webinar. We are looking at the segment of the discussion of BTC or Bitcoin, and we are trying to figure out what was being discussed in the last webinar and how things have transpired since then. Okay, so we are looking for bullish setup on this counter. The market has given corrective pullback. It has gone to the pullback zone, the white box, the white support region, precisely as expected. And the idea was that we are going to look for longs, but I wasn't very keen unless the market took out this alert, whatever this is, around 116000, something like that. I'm pretty sure I wasn't clean because this bearish movement or the downside correction, this pullback was quite strong. So above 11.5 115464, we were looking for long. I was a setup on BTC 115464. What a number. And here's a live chart now on screen. Wherever that is 115464. Let's figure that out. Somewhere here. So it did go up above that level and it has literally done whatever we were discussing in the last webinar. I mean, again, if you are missing the point now with this last webinar itself, we have captured three trades. We have captured a trade of crude oil, gold, and even BTC we were able to capture. So these are just three trades from this free webinar. It went up precisely as per analysis, precisely after our marked level, and precisely it has actually even touched the target itself. The bare minimum in this situation is to take out the last high of 124,518. It has more or less gone very near it. It will. It is expected to take out this level, but as such, if you were able to take this journey from here to here, that's itself a quite a big move in itself. 4% plus. So as such, this analysis has also yielded the profits and it is currently progressing precisely as per analysis. Let's now look at the internals and a little bit of details. And what about you guys? There are so many trades we discuss and I keep saying this worked out, that worked out. And obviously we are taking our own trades and posting them in the Slack group. What about the guys who are just following the webinars? Are you guys just here for what do you call entertainment? Don't you ever do your analysis or ever put any emphasis on the analysis and take any action or initiative? Because there has been a long time since I heard that I took this trade or I took that trade. So if you are doing just observation and not playing it out, then what's the point of it all? Hmm? That's just the rough idea I have on this chart. That's how I believe this market can play out. At least it is right now. So more upside is expected on this counter on BTC. There is an alternate view here which is suggesting some pullback can happen here, but we don't need alternate view for it. We can just switch to the daily chart, and this level is the last lifetime high, I guess 124. Yeah, that is the last lifetime high. So yes, of course, it can act as the resistance, and the market can just give some minor pullbacks here, perhaps even a little bit major pullback here as well. But overall, the bias remains bullish, and if you were long, this would have been a time to get out, at least book partial profits, I mean, and let the remaining run wild if the market decides to go up, because it can just break out and give huge up move from here as well. But as I was saying, minimum targets have already been achieved. And if yes, it looks like we haven't projected a proper target for this market in a while. If I was to give some wild targets, this market is giving targets which are literally taking this thing to the moon. 171, 234, 246786. That will more than double it. Actually, not 246, I would say 243000. So those are some wild targets. We haven't properly calculated them using all the different methodologies. We have just taken a rough outlook using the simple trend line analysis, but those do hold. At least if it's super bullish, then why would they not hold? So 170 plus and then 240 plus. That's BTC for you. Again, as I said, if you were long, it would have been time to book partial and then leave the remaining for luck to play itself out. If you are not long, then it does become a little bit risky because the stop loss is kind of wide here. It's coming around 109057. Everything is just too big here. Stops are big, targets are big. Anyways, I'll just push it here. That's what you call our current SL level, in case you haven't closed out all the longs. With that, let's now move over to, we do have some comments which I haven't checked. Yes, thanks. On the chart, the grid are good. The grid are good. I'm not really sure if you are referring to the grids lines which I'm using, these boxes, or if something else. I personally prefer the grids. They do give a sense of space and time here on the charts. Without checking everything, I can get an idea of a lot of things with these boxes themselves. Or if you were referring to something else, please be more clear, Marco, and I'll answer that, or I'll try to answer that to the best of my abilities here. Muhammad is asking, he's saying, hello. Hello, Muhammad. Nice to see you back in the webinars. Hey, Raghu. He's probably reverting to my question on do you guys not even trade? Raghu has booked profits on NVIDIA's around 190. That's good to know, Raghu. So, NVIDIA has been a stock we have been following for quite some time, actually, on Raghu's recommendation or request, you can say. I had no actual plans of following NVIDIA. He's the one who keeps asking about it and we keep following it. So, that's good to know. I'll probably highlight it when we discuss NVIDIA as well. Hey, here's Joe. He's taking the trade on Euro. Yeah, that's true. You were able to get in and get out in minor profits. That's nice to know. I had to actually get out near entry, but it was still a minor loss. That's good. Even small amount of money counts here. We are in a business, so everything counts. Okay, now concluding our discussion on BTC, I guess everything has been discussed. Let me know if you have any questions on this. I'll check back the comments again because I want to skip to the last chart of NVIDIA. And yes, guys, again, all my regular viewers, Marco, Joe, Raghu, and I believe you guys already are sharing the content, but it's high time that you kind of focus a little bit more on sharing. Just take 10-15 minutes out of the webinar, out after the webinar, I mean, and just figure out the name of people who will benefit from this kind of content. You definitely will have some circles which are related to trading or speculation, and if not, then personal connections perhaps. Because I have asked many times for people to share so that we can get a little bit wider audience, but the audience has kind of remained the same and reduced. I'm not really sure why. We are completely transparently running the business. We even check what was said, what happened, and everything else, but still we are not seeing the kind of participation. So I'm requesting you, my regular viewers, as well as private Slack group members, to kindly take this a little bit seriously. Take some time, 10-15 minutes, and share this content in some seriousness with expected people who will join in as audience and will enjoy the content. With that being said, we'll now conclude this chart analysis and head over to our last chart, NVDA. Obviously, we'll first discuss what was said on this chart in the last webinar before heading to the live chart. And here's the chart on screen. We are looking at, here's some theory I'm talking about: breakout, retest, support, some support, resistance, price action analysis kind of stuff. What is the main conclusive count here? All right, so the count is, I believe, that the market can still remain sideways, break above the resistance, still pull back, and then go up. It can also just fly high from here. So it can give a kind of a false pullback before the actual breakthrough. I mean, a false breakout. I mean, sorry, not pullback. False breakout and then a pullback before the actual breakthrough or breakout, I should say. You can just check out the last webinar if you want more details. I'll not waste any more of the time here. And here's the comment from Raghu. He has taken the trades following our previous webinars and even booked some profits. So I'll just adjust accounts very quickly. All right, so here's the take on NVIDIA. We were looking for what do you call pullback, move up. Here's the analysis from last webinar that the market can break higher and then give pullback. Let me just change the color. Break higher and then give pullback and then move up. It can also alternatively move straight up. Both these views are holding perfectly fine on NVIDIA. In both cases, the idea was that from a swing perspective, this market can just simply go up. Now, what we are seeing live on the chart is the market has gone up. It has broken above the support or sorry resistance level. Now it's heading lower. It probably tested as support, and this if becomes support, it can just take the market higher from here. So it will be nice to see the market's price action between the level of 184 to 190 within this small range. It can actually even expand and go a little bit deeper as well before the takeoff. So the idea will be if the market does go lower, let's just remove this. Let's just say it just goes lower, then we'll just place an alert over here near the last high around 189 something, and then we'll look for breakout longs above 189. We can also enter swing longs, minor position entered over here on the pullback. Let's say we want to add 300 shares, we can add 100 here, 100 here, and 100 above the breakout. That's how we can do position sizing on NVIDIA. The long story short is the market remains what do you call bullish. That analysis is, I would say, playing out. It has given the breakout. It hasn't 100% played out. It has partially played out. But then again, what do you expect in a week's time? Not everything plays out in weeks' time. Sometimes they play out in seconds. Sometimes it takes 3 weeks, 4 weeks. So, anyways, for now it has gone up as per analysis, and we'll call it a plus one. I mean, people have been able to take profits off of it, so why not? I'm not currently trading Nvidia, just to be clear. I'm only analyzing it on request. That's not the kind of markets I'm currently into. Although I wouldn't mind trading it, it's looking just fine. I don't think there is much to add here. Wait for pullback to long, wait for pullback for conservative breakout trade. Both scenarios hold as for the targets. If somebody wants to ask targets, I think it will be better discussed in the next webinar. I don't want to comment on the targets just yet. We still want to see how this thing plays out. Does it go straight up or will it go pull back and then up? So based on that, we'll determine the targets in the coming sessions. I'll just push it in the private Slack group. And that's about it for this webinar, guys. Thank you for staying till the end, those who did. And of course, as I made their serious request, do consider sharing the content much more seriously. Take some time out and help us take the channel to the next levels where we can continuously share more content with more audience and collectively have a better community. And with that, we can say we have finally concluded. Everything has been discussed, which we wanted to discuss in this webinar. I'll wait a few moments to check if some of you guys have any queries remaining on NVIDIA. I do know there's a delay between the time I speak and the time you can hear it and then respond. This is why I'll wait a few seconds. And if not, you can always type in understood and clear. That will conclude the webinar as well. Again, guys, thanks for staying till the end, those who did. And obviously, do not forget to enjoy the weekend. As always, I'll look to see you guys in the next webinar. You're very welcome, Marco. You too have a good weekend. You're very welcome, Joe. And of course, enjoy the weekend, you too. Thank you. Thank you for the awesome comment. Thank you for staying till the end, guys. And of course, have a great weekend. You're very welcome, Bharti. Wonderful analysis. Have a nice weekend. You too, Raghu. Have a good weekend. And of course, Raghu, I didn't see your response when I requested on sharing. I do believe you are a very long term follower, so you will be sharing the content. But if you did not hear my comment or missed it, as a personal request here, do consider taking out 10-15 minutes and sharing it with the right audience. I'm pretty sure you will have circles of people who are interested in this kind of work. With that being said, I'll now put an end to my words and see you guys in the next webinar. Take care. Bye.